Hello students, welcome to MJC Learning. Today we will do the sixth part of the chapter number 9, that is money market and the capital market in India. Now let us first start with what is the meaning of capital market. Capital market in India, what is the meaning of capital market? Capital market first of all is a market for the long-term funds. What is capital market? It is a market for the long-term funds, both equity and debt raised within the outside the country. So it is a market for the long-term fund. It is also important constituents of the financial system. So capital market is the important constituents of the financial system. Development of effective capital market is necessary for promoting the development of the nation and achieving the economic growth. So how long and how much is the capital market is developed in India? Economic growth depends upon that factor. So demand for the long-term funds come from agriculture, trade, industry, individual savers, corporate saving, banks, insurance companies, specialized financial institutions are the suppliers for the long-term fund. So in this part we have done what is the meaning of capital market. Capital market is a market for the long-term funds. Basically, the economic development of any country depends upon the development of the capital market. And this market basically provides the long-term loans for the agriculture, trade, industry, individual saver, corporate saving, banking, insurance company, and the institutions that supply the long-term funds. Now let us see the structure of the capital market in India. The capital market of India comprises of the Gilt-Edged or the government securities market, industrial security market, development financial institutions, and financial intermediaries. See, when we want to understand the structure of the capital market, we can see in this diagram. The above diagram indicates that the structure of the capital market in India. See, the capital market is basically divided into four parts. First one is the government securities. The second one is industrial security market. Third one is development financial institutions. And the fourth one is financial intermediaries. Now, industrial development security market is divided into two parts. That is the new issue market and the old issue market. And development financial institutions are divided into six parts: IFCI, ICICI, SFCs, IDBI, IIBI, and UTI. And the financial intermediaries is basically divided into five parts. That is the merchant bank, mutual companies or the mutual funds, leasing companies, venture capital companies, and the others. So this diagram indicates the structure of the capital market in India. Now let us first deal with the government securities market. Government security market is also known as the Gilt-Edged market. It deals in government and semi-government securities. Such securities carry a fixed rate of interest. So government security is also known as the Gilt-Edged market. It deals with semi and government and the government securities. It carries a fixed rate of interest. And the second one is industrial security market. Industrial security market deals with the shares and debentures issued by the old and the new company. So what is industrial security market? It is a market which deals with the shares and debentures issued by the old and the new company. It is further divided into primary market and the secondary market. Primary market is also known as the new issue market and the secondary market is known as the old issue market. Now the primary market helps to raise the fresh capital through the sales of the shares and debentures, whereas the secondary market deals with the already issued by the companies, that is the securities already issued by the company. So secondary market function through the stock exchange. Stock exchange is an important constituent of the capital market. It deals with both the bonds, commodities are traded. Bombay Stock Exchange BSE and the National Stock Exchange are the premier stock exchange in the country. Now the third one is Development Financial Institution, that is DFIs. They provide medium-term and the long-term financial assistance to the private sector. DFIs basically provides the medium-term and the long-term financial assistance to the private sector. They include Industrial Finance Corporation of India, IFCI, Industrial Investment Bank of India, that is IIBI, and Exim Bank. Exim means the Export and Import Bank. Fourth one is Financial Intermediaries. Financial Intermediaries is an organization which acts as a link between the investor and the borrower to meet the financial objective of both the parties. They consist of the merchant bank, mutual fund, leasing companies, venture capital companies, etc. Now let us see the role of capital market in India. Basically, when we talk about the role of capital market, there are the 5 types of role. That is, the first one is mobilize long-term savings. Second one is provide equity capital. Third one is operational efficiency. Fourth one is quick valuation. And the fifth one is integration. Now let us start with the first one, that is mobilizes the long-term saving. So the capital market mobilizes the long-term saving. There is an increasing demand for the investment funds by the industrial organization and the government. But the availability of the financial resources is very insufficient to meet the growing demand. So the capital market helps to mobilize the long-term saving from various sections of the population through the sale of securities. So the first role of the capital market is to mobilize the long-term saving. Second one is provide equity capital. Capital market provide an equity capital or the share capital to the entrepreneur, which could be issued to the purchase asset as well as the fund of the business operations. Now let us see the third one, that is operational efficiency. Capital market helps to achieve the operational efficiency by lowering the transaction cost, simplifying the transaction process, lowering settlement time in purchase and sales of stock. So third one was operational efficiency. Fourth one is quick valuation. Capital market helps to determine a fair and quick value of both equity shares and debt, bonds and debentures. Fifth one is integration. Capital market leads to integration among real and the financial sector, equity and the debt instrument, government and the private sectors, domestic and external funds. So these are all the 5 role of the capital market in India. I hope all the 5 role is clear. First one was mobilize the long-term saving. Second one was to provide the equity capital. Third one is operational efficiency. Fourth one is quick valuation, and the fifth one is integration.